Before Warren Buffett became one of the richest investors in history, one book completely changed the way he thought about money. Not because it promised quick riches, not because it revealed a secret investing strategy, but because it taught him one simple idea that would shape every major decision he made for the rest of his life. Decades later, Buffett still calls it the greatest investing book ever written. But here's the surprising part. The lesson that changed his life had very little to do with picking stocks. Years earlier, before any of that, Warren Buffett wasn't a billionaire. He was a teenager in Omaha, Nebraska, delivering newspapers before school every morning. His route included 6 U.S. senators and even 1 Supreme Court justice. At just 14 years old, he was already filing tax returns and deducting his bicycle as a business expense. By most standards, Buffett already understood money better than people twice his age. But he was still searching. He spent every spare moment reading about investing, convinced that somewhere there had to be a principle separating people who consistently built wealth from those who simply got lucky. He tried technical analysis. He studied stock charts. He experimented with market indicators that promised to predict tomorrow's prices. He sat for hours inside brokerage offices, watching ticker tape roll across the machines while investors rushed to buy and sell. The stock market fascinated him, but something never felt quite right. The more he learned, the more he realized everyone seemed obsessed with the same question. What will the market do next? Very few people were asking a different question. How should I actually think? For nearly 8 years, Buffett searched for that answer. Then, at 19 years old, while studying at the University of Nebraska, he walked into a bookstore in Lincoln and picked up a book called The Intelligent Investor. It looked ordinary. No dramatic promises, no claims about becoming rich overnight, no secret formulas hidden inside. Just a simple title and the name Benjamin Graham. Buffett would later say that reading this book didn't just change the way he invested, it changed his whole life. That statement sounds almost unbelievable. How can one book redirect the course of someone's future? To answer that, we first need to understand the man who wrote it. Benjamin Graham wasn't trying to teach people how to beat the market next month. He had already lived through one of the greatest financial disasters in history, the Great Depression, and watched fortunes disappear almost overnight. He reached a simple conclusion. Markets weren't the biggest problem. People were. Fear, greed, impatience. Those 3 emotions destroyed more wealth than almost any bad investment ever could. Instead of writing another book about predicting stocks, Graham wrote something much more unusual. He wrote a book about temperament. That's exactly what caught Buffett's attention. Years later, Buffett would often say that the 2 most important chapters in the entire book were chapters 8 and 20. Just 2 chapters. And inside them were ideas he would continue using for the next 70 years. Let's start with the first one. Benjamin Graham introduced an imaginary business partner. He called him Mr. Market. Imagine you own part of a private company. Every single morning, your business partner knocks on your door. Some days he's wildly optimistic. He believes the future is incredible. He offers to buy your share for an absurdly high price. The next morning, he comes back completely depressed. Now he thinks the business is worthless. He's desperate to sell you his share for almost nothing. Then the following day, he changes his mind all over again. Most people would probably stop taking this person seriously. But that's exactly how Graham said we should think about the stock market. The market behaves emotionally, sometimes euphoric, sometimes terrified. Its job isn't to tell you what something is worth. Its job is simply to offer prices. You are completely free to ignore them. That sounds obvious, but it completely flips the way most people experience investing. Most investors wake up every morning asking one question: what is the market telling me today? Graham argued they should ask a completely different one. Is Mr. Market giving me an opportunity, or simply having another emotional breakdown? That single shift changes everything, because suddenly the market stops becoming your teacher and starts becoming your servant. For Buffett, this wasn't just an investing lesson. It was emotional independence. He no longer needed the crowd to tell him whether he was right. He only needed to understand what something was actually worth and have the patience to wait until the price made sense. It was a simple idea, but it completely rewired the way he would make decisions for the rest of his life. And yet, Mr. Market wasn't the biggest lesson in the book. Benjamin Graham saved that for another chapter. It's the principle Buffett still calls the foundation of intelligent investing, and the idea that ultimately helped build one of the greatest fortunes in history. But as powerful as Mr. Market was, Benjamin Graham believed it wasn't the most important lesson in the book. That title belonged to something he called the margin of safety. Imagine you're an engineer designing a bridge. The heaviest truck expected to cross weighs 5 tons. Do you build a bridge that holds exactly 5? Of course not. You build one that safely holds 10. Not because you expect disaster, but because life is unpredictable. Graham believed investing should work exactly the same way. If you estimate a business is worth $50 a share, don't buy it for 50. Buy it for 30. That difference is your margin of safety. It protects you if your estimate isn't perfect, if the economy slows, or if something unexpected happens. Suddenly, investing stops being about predicting the future. It's about leaving yourself room to be wrong. That idea completely changed Buffett's definition of risk. He wasn't looking for perfect businesses. He was looking for great businesses that everyone else had temporarily given up on. Think about how we behave everywhere else in life. When your favorite jacket goes on sale, you buy it. When a television is discounted, people line up outside stores. But when the stock market goes on sale, most people panic. Benjamin Graham understood that markets are driven less by mathematics than by psychology. People become greedy when prices rise and fearful when they fall. Buffett learned to do the opposite. Reading The Intelligent Investor didn't make him rich overnight. Instead, it changed the direction of his life. A year later, Buffett applied to Columbia Business School because Benjamin Graham taught there. He became Graham's student and later worked for him. Their relationship lasted for decades, and Buffett admired him so much that he even gave his first son the middle name Graham. The book had opened the door, but discipline was what carried him through it. While the rest of Wall Street chased headlines, Buffett quietly followed the same principles year after year. He wasn't trying to predict tomorrow. He was buying outstanding businesses when the odds were in his favor and holding them long enough for time to do the heavy lifting. Those decisions eventually became one of the greatest fortunes in history. Today, we have more financial news, more data, more podcasts, and more AI tools than Benjamin Graham could ever have imagined. Yet people still make the same mistakes. They panic during crashes. They chase hype during bubbles. Technology has changed. Human nature hasn't. That's why Buffett still recommends the same book. Not because it teaches you how to beat the market, but because it teaches you how to beat yourself. People often think Warren Buffett's greatest investment was Coca-Cola, Apple, or American Express. I don't. His greatest investment was learning a framework for making decisions before the world knew his name. The Intelligent Investor didn't teach him certainty. It taught him patience, discipline, independent thinking. Those qualities didn't just make him a better investor. They made him one of history's greatest decision makers. And maybe that's why, after more than 70 years, Buffett still calls it the greatest investing book ever written. Because markets change, companies change, technology changes. But human nature rarely does. Every great fortune begins with an idea. This was Buffett's.